Hey everyone, how's it going? Mike with Habitual Finance, back again. And this week I want to talk a little bit about investing and the beginning of investing and why you should do it. So I want to start out by saying, as you all should know, I'm not a licensed CPA, I'm not an investor, I don't work for any big firms or this and that, and I'm not giving out advice or anything like that. This is strictly for educational purposes. I just want to help you guys get in the game, get in the investing game, and start making money for, just being, being good at saving. So now that I've got that out of the way, I just want to supplement last week's video on, like Christmas spending and New Year's resolutions, because I think that as long as you've got you're good at saving, you got most of your debts paid down, I think it's a great resolution financially is to start investing. And I'll show you in a little bit. I'm going to actually use my my Robinhood account to show you guys how I've been investing these past 2 years. And a lot of people give Robinhood guff, but I'll show you why I like them and what I think they're good for. So to start, like 2 years ago, I started investing with $50, $100, and just every bi-weekly when I would get a paycheck, I'd throw some more money in there, and it taught me, I was looking at it every day, like seeing if it was going up or down or this and that, and you get excited and you want to see what's happening. But it really teaches you, Robinhood especially teaches you patience, I think, where then after a while I'm just like, okay, so it's not going to move that much, especially when my portfolio is this low. We're talking like a few cents every day. It's not worth me taking the time to open my phone and look at this thing and stress over it. If it dropped a couple dollars last week, who cares? And then once your portfolio gets larger and larger, that's when these percentages start to add up, and it feels great. Because when it keeps going over time, it'll just keep going up and up and up. It's just the market is up and down, and there's nothing wrong with that. There's no need to time it. There's just pick a bi-weekly, weekly, monthly, whatever you want to do, and just throw some money in it. You know what stocks are good. Ignore the penny stocks. Ignore all that garbage. Just pick some good stocks. Pick some good ETFs. They're safe, they pay dividends, and you'll see. The money you have in this account shouldn't be money that you need, that you're thinking like you're investing in and you're just like, but what if I need this next month for the bills? Like if you're thinking that, you shouldn't be investing yet. This is money that is for future you to make life easier later on so you can do what you want in life. Because not everybody is doing what they want to do right now. And I hope you learned something, and I hope it gets you more excited and more into investing, because it really is great. So I'll see you guys in a second. Alright everyone, so this is basically what I'm trying to talk about. Here is my Robinhood portfolio, and I've just started this, back in 2017, I think it was back in November. And I just want to show you that there's never a bad time to start investing if you are investing in, normal stocks. Don't invest in penny stocks, because maybe you'll hit it big, but maybe you'll also hit the lottery. Those are basically your chances with that. So if you want some steady investing, let me just go to my overall. So here's really what I want to show people. Like back when I started, I did not start with that amount. I started with like a couple $100s. So yeah, beginning of November in 2017 is when I started. And as you can see, percentages go up and down, fluctuate a little bit. And every now and again, every paycheck, I was throwing some more money in. And I was by no means at 8,000. Just ignore that number. It's based on my overall account value now. And then at one point, I was up, 4.3% almost, which is great. And then I actually forget what happened, like why this happened. But this huge drop in the stock market back in December of 2018, and it was basically a correction. The markets beforehand have, it's just the way of the market. It's just what happens. It's the up and down of the market. So as the stocks went down and down and down. And if you have the mindset I'm talking about of a long-term investor, what you want is to invest for years and years. So just because, a year after I started investing, there's this massive drop. Like, look at this. I was up, let's see if I can get this. I was up 4% and then all the way down to under 13%. People would freak out at this point and be like, oh my God, what's going on with these stocks? I hate investing. This is not cool. This isn't worth it. And then they cash out and they're done. So all they did was lose money. That was it. Maybe they got a little bit of dividends, but who knows? So that's wrong. So what you do as a long-term investor, while you're moving around, you're like moving here, you can, it's sliding down. You buy a little bit more. It's going down more. You buy a little bit more. Your stocks that you pick, they're on discount. They're discounted. And then all the way down here, obviously I did not time this. But then once I saw it going back up a little bit, I bought a ton down in this area, a ton of stock down in this area, supplement what I have. And then it was on a huge discount. And you know a good company when you see it. You know they're not going out of business tomorrow. You probably use them every day or multiple times every month or whatever, depending on the company. And then look, you just keep investing. You gotta bi-weekly, you put in $100 into your portfolio, $200 into your portfolio, and it just keeps going and going and going and going and growing and growing. And also during this time, you get dividends if you're investing in dividend type stocks. And then look, after all that time, I was up even as high as, what is this? Almost 22% here. So after all that happened, most people would look at this and down here and be like, oh, that's it. I'm done. I lost way too much money. And I did not actually lose $1,100 back then. It was 13% of whatever my portfolio was, which was not that much back then. This took 2 years of me diligently putting money away into this play account, I'll call it. And then look, just over time, like I said, most people down here would just be like, oh, that's it, I'm done. You lose all this money. But if you're patient and you have a long-term plan, and like you should, look at what happens. You gain dividends this whole time. I get a couple $100 every year through dividends from what I invest on this. And and then look, now I'm profitable. I'm up almost 20% since then. That's great in my opinion. That's free money. I didn't have to do anything for. You just kind of know that okay, yeah, I'm just being diligent, because the fact that I can save money save it so much that I can invest some means that I get this reward of increasing my net worth with these companies that I invest in as well. And of course, I'm not going to get into it. I'm not going to show what I invest in, because I don't want to be, I'm not a licensed CPA. I'm not a Wall Street trader. This is just strictly for educational purposes. And I just want to show you guys a quick example. I think this is a beautiful example. I show people this all the time of what happened. And now it's only been 2 years, but 5 years from now, say I still have this Robinhood account. That's going to look, that dip right here, this dip in December of 2018, that's going to look like a tiny little divot of who cares? And same thing with here, like this dip, this is almost a month span. I bet you, CNBC was going crazy saying it's the end of the world. The stocks are falling. Who knows what's going on? Everybody bail out. It's this person's fault. It's that person's fault. Just ignore it. Ignore it. I go onto these stock websites every day, and I'll glance at headlines, but I never read anything into detail. There's no point. It's all, this is just the flow of the stock markets. They just don't believe any, what you hear on there of like, oh, it's the end of the stock market, sell, sell, sell. No, this is your time to buy. When it goes down, that's your time to buy, long-term investors. So again, this is overall just what I wanted to show you. I'm also, in a later video, I'll show you my my 401k account and the dividends that I get in there based on, maybe I'll show you the stocks I picked, but again, this is just all educational. I'm just doing this to, give you guys an example of what it looks like and why you shouldn't be worried of, investing, why you shouldn't be scared of it. Even if you're putting in $50, again, Robinhood's coming out with something soon, if they already haven't, where you can buy fractional shares. That will be helpful for small investors too. Again, I like Robinhood for it's very easy. A lot of people give it a lot of guff, but it's not the worst thing to me. It's really not. Like, I did this to learn, and I learned a lot, as you can see. I learned so much that I'm making this video so I could show you guys, what I learned. So I made a good amount of money already, and I've also made money through dividends. I've learned a lot about stocks. I've learned a lot about options, dividends, the market, the trends, and this and that, and now I get it. I feel much more comfortable now. And because of this, I'm going to take this. There's nothing wrong with Robinhood, in my opinion, but I'm going to bring this money starting next year, which it is next year. It is 2020. At the time of this posting, I'm going to put this into an IRA account, a Roth IRA account, to be specific, just because that's more tax advantage to me. Like, when I take this money out, if I took this all out right now, I'd get taxed on this 1646.13 that I profited, which isn't bad. This is long-term capital gains. Another thing I'll be talking about in a later video. When you hold stocks longer, you get taxed less. I believe if you hold it for over a year, those specific shares for over a year, then any shares that are older than a year that you sell, that you profit on, are taxed much less than a short-term capital gain, whereas if you were to sell those shares earlier than a year. They all have their unique advantages, but again, I prefer long-term investing, and this is just what I want to show most of you guys, because this is just a smarter way, in my opinion, to stabilize yourself throughout your career, throughout your life. If you want to retire early, I sure as hell want to retire early. That is my number one goal for finance. I want to retire early, and I want financial freedom, and this, in my opinion, is a way to do it. So again, this is it for the Robinhood session of the stock market checking session, and I'll check back with you guys in a few minutes. All right, everyone. I hope you learned a lot from looking at my Robinhood portfolio. Again, I'm not here to show you stocks. I don't want to sway your decisions. You know what good companies are if you've been looking into it, good ETFs and all that. But again, just to recap, I hope that if you guys are looking for some financial New Year's resolutions, then and you're stable, you're good at saving, you could pay your bills comfortably, you don't have any crazy debts, I really hope that you could start investing, because future you is going to thank you. Because who knows what's going to happen in the future. And it's nice to, in the back of your mind, to be like, oh yeah, I've got like $50,000 in this account, or even, depending on how old you are, hundreds of thousands of dollars in this account. This separate account that's not even a 401k, So again, that's why I decided to use Robinhood. I've been using them for 2 years, and I think it was a great learning experience. I'm going to continue to use them, as I've said, but I'm also going to be moving portions of that portfolio I just showed you into, because now I feel like I am knowledgeable enough in stocks and everything. I'm going to move into putting that money into a Roth IRA and getting more tax advantage out of my investing. So I'll make another video on that soon as well, Roth IRAs. And you don't even have to start out with Robinhood if you don't want to. It's totally up to you. I'm just giving, it's just a free option to for you guys to start investing. Everything's totally free, and like I said before, even if the fractional shares come out soon, it'll make it even easier. So yeah, thanks again for listening, guys. I'll actually post my, Robinhood gives you a code, and I'll post my code below, so if you haven't signed up for Robinhood yet and you want to, put that code in and you and I will both get a free stock. And it could be various stocks from like Ford to Apple or anything in between, you know, anything like that. It's just the luck of the draw. Any comments, please let me know below. I'm happy to answer them anytime. And leave a like if you like this video. Leave a thumbs up. I really appreciate it. And subscribe if you haven't. So thanks again. I appreciate you guys listening, and I'll see you next week. Bye.